everyone, welcome back to my channel Million Dollar SIP. In this video, I'll talk about how PPI eases recession fears and how there is a higher probability of Fed rate cut. Also, how markets slip on Trump's 200% tariff threat on European Union. Then I'll dive into my regular updates on entry, TQQ's performance today, day 18 portfolio updates, and analysis of my portfolio in comparison to TQQ's performance. Full details ahead, so stay tuned. First, the big story for today. This morning, the producer price index report for February landed, and it's giving Wall Street a much needed breather. But first, what is PPI? It is the inflation gauge for wholesalers measuring price changes producers charge for goods and services before they hit retail shelves. The Bureau of Labor Statistics calculates it monthly across industries, everything from manufacturing to healthcare, making it a leading indicator of consumer price trends and a red flag for economic trouble if it runs too hot. Back in September 2024, PPI was a tame 2.1% year over year. Then October hit, jumping to 2.8%, a wake-up call after months of cooling. It didn't stop there. November climbed to 2.9%, December edged up to 3.4%, and January spiked to a worrisome 3.75%. That's a steady climb. 1.95 percentage points in 4 months, stoking recession fears as businesses faced rising costs amid Trump's tariff flurry since February. From January, public screamed panic, with traders noting PPI's relentless rise and recession vibes stronger than ever, especially as the S&P 500 slid 8.9% from its February 19th peak. End of February's report, PPI dropped to 3.2%, down from January's 3.75%. After 4 months of increases, this 0.55 point dip is a lifeline. Jan's 3.75% had markets braced for a 4% plus reading, but 3.2% suggests wholesale inflation's losing steam, easing worries of a cost spiral that could tank demand. This ties straight to the Federal Reserve. After pausing rate cuts in December at 4.25 to 4.5%, the Fed's been hawkish, eyeing Trump's trade policies, but Feb's PPI, paired with yesterday's CPI at 2.8%, paints a softer inflation picture. Investors now see a lifeline, a higher chance of a 25 basis point cut at next week's meeting. It's not a victory lap, but it's a crack of light in a stormy market. Next big story, this morning, President Donald Trump dropped a trade war bombshell, a threatened 200% tariff on EU alcohol imports, from French wine to champagne. It's the latest salvo in a tit-for-tat escalation that's been brewing since February. So let's rewind the tape. The fuse lit on Feb 1st when Trump slapped 25% tariffs on Canada and Mexico, plus a 10% hike on China, citing immigration and fentanyl flows as national emergency. Canada hit back with $20 billion in tariffs on US goods such as steel, computers, even liquor bans in some provinces, while Mexico eyed vehicle levies. China countered with duties on US soybeans and tech, deepening a $200 billion trade deficit feud. Then on March 12, which is yesterday, Trump went global, imposing 25% tariffs on all steel and aluminium imports, effective immediately. The EU took it personally. Within hours, the European Commission fired back, announcing a 50% tariff on US whiskey set to kick in April 1st, part of a $28 billion retaliation package targeting bourbon, beef, and bikes. Trump, furious, called it nasty and disrespectful to red state staples like Kentucky bourbon, which exports $440 million annually to the EU. Enter today, Trump posted on Truth Social, the EU's 50% tariff on whiskey. If not removed, the US will slap a 200% tariff on all wines, champagnes, and alcoholic products from France and other EU countries. He also stated that it will be great for US wine businesses. The US imports $4.9 billion in wine and $1.7 billion in champagne yearly. So France, Italy, Spain hit hardest. Will investors keep flinching? Since CPI and PPI reports came out good, and if tomorrow's jobs report shines, there is possibility of market numbing to Trump's daily tariff drumbeat unless this trade war goes full nuclear. Next, let's move on to my regular update on where I am on my journey from $0 to $1 million in 10 years. My daily investment limit continues to be $200 to $250 as opening price and closing price of Wednesday's candle on 1-day time frame are both below the 12 EMA. A quick run through if you are new to the channel, I have fixed weekly investment limit set, which is $750 to $1,000 when in an uptrend and $1,000 to $1,250 in a downtrend. Since we're in downtrend, this applies when converted to daily limit, it is $200 to $250. Then I switched to the 5 minutes time frame. Today TQQQ opened with a very small gap down of 0.58%. So I only needed to wait for the bounce back to about 12 EMA with proper confirmation in order to take entry. At 9:15 Central Time, price crossed back about 12 EMA followed by clear confirmation. So I took entry where I bought 4 units at 60.35, investing $241. 4 units is same as yesterday because we're in a similar price level. Then I went on with my day and monitored TQQQ movement for analysis. And here's how it performed. It closed at 57.79, down 5.46%. Fall is due to panic among investors with the ongoing trade war. Now, let's take a look at today's portfolio performance. So far, my total investment stands at $3,877 with the latest TQQQ price closing at 57.79. Which brings the market value of my holdings to $3,120 and my average cost per unit is currently $71.80. Meaning I am sitting on a net loss of $757, which translates to a 19.5% decline. Since I started this investment journey, TQQQ has dropped by 36.3%, but my portfolio has declined by only 19.5%. This means I have successfully outperformed TQQQ by 16.8% so far. This demonstrates the effectiveness of my hybrid SIP strategy, which helps mitigate downside risk while allowing me to accumulate more units at lower prices. By following my structured approach, I continue to reduce my average cost while staying ahead of TQQ's overall decline. That wraps up day 18. I'll keep bringing daily updates plus a weekly summary to track my progress. If you're enjoying this, hit that like button, subscribe and follow along. Let's grow this together. See you tomorrow.